Coming to the fiscal deficit, first of all, what is your projection for the year? And before that, actually, you can tell us the projection for the year. And do you see any fiscal pressures mounting going into this year?
Right. So FY24, lots of moving parts, some positive, some negative. On net, we think the government will meet the 5.9% fiscal deficit target. There's been some disappointment on disinvestment. The expenditure numbers on the revenue expenditure side are on the higher side, but direct tax collections have also been quite strong. So we think that should be able to offset some of the negatives, including the lower nominal GDP growth we have seen in FY24, which basically sets us up for FY25. This, of course, being an interim budget, but also importantly, the pre-election budget. We do think that the big focus for the government in this budget will be on the specific, electoral categories. So, we're looking for more allocations to come through on rural, on agriculture, for farmers, for women, for youth, as I mentioned, low-cost housing. So some of these specific segments could get more allocation. Capital expenditure has already been ramped up quite significantly over the last 2-3 years. We do think that the momentum on capex will be maintained in FY25, but at a slower pace compared to the last 3 years. And therefore, on net, we think FY25 fiscal deficit target should be brought down to around 5.3% of GDP, so about a 60-odd basis point in terms of consolidation, with the objective to get to the medium-term target of 4.5% in FY26, or at least as close to it as possible.